So now, the first session was all about the presentation in the mode of the webinar, which happened these days used for that. And now let's call for the discussion. Amaya?
Yes, sir.
Oh, perfect. I can hear you, man, after a long time.
Yes, sir.
Great. How are you doing?
I am fine, sir.
Thank you, sir. Come on, sir. What is that the derivatives market now for you?
Um, sir, I actually don't trade in derivatives market, but then I really want to, and I think this course is going to be the motivation for me now.
To trade in the market.
Yes, in derivatives market.
Yeah, but remember one thing that though it is said as the risk management tool, at the same time, especially when it comes to the options, we might witness it as a zero on the expiry day.
Right, sir.
Yeah, and as you rightly said, I think your mother is in the same line of business, right? Yes.
Yes.
It is a good time now. You can have a discussion with your mom and then get the insights of that.
Yes,
And you
yes.
can also add value to our session too. Perfect.
Absolutely, sir.
And now,
Whatever I can include.
yes, sir, always, sir, welcome. And I want to know who is trading in the derivatives market. We will have a discussion now, and that is what the presentation and discussion meaning is all about. I'm done with my presentation in the mode of the webinar, and now we are understanding what is that we have done in the webinar session.
Sir, I have a question, sir. Shreyans.
Shreyans, yes, sir.
Yes, sir. Suppose I want to trade in gold. So, what are the indices that I should look into? Like indices, like how to trade in that, sir. Suppose I want to trade in gold.
Yes.
So, how much quantity, what price, how much, how to trade in that? That is what my question is.
Yes, thanks for that question, Shreyans. In fact, that is what our project is all about as a part of your evaluation, which I've designed. Okay. And to answer this question in a very simple sense, it's an operational question. Anyway, if I want to trade in gold, what is that I should do? As you all know that you will be having a demat account, and provided you need to have an access, it's a special access to your derivatives segment, F&O segment. You need to be very clear with the CDS, NFO, and then that has to be given as an access by your stockbroker. And you can buy gold on a lot size. And even in the case of options market, you can buy a call option on the gold and put option on the gold. Provided in the futures market, you can see the gold prices. When I say futures market, you will see 3 contracts which will be actively trading in the market. And if you are a goldsmith, probably you might have been experienced that these goldsmiths will be regularly watching the gold price in moneycontrol.com app. Generally they trade and then they monitor because they want to know what is the price at which the gold is likely to behave or move. Therefore, in simple words, if you want to trade, you need to have an access to F&O, the commodity segment, derivative segment, and then you can trade in these products. If I want to buy futures gold, you can buy. Now, I'll add one more question to the Shreyan's question. Now, when I say gold, how many contracts are available for gold in the derivatives market? A simple question. Remember, as of now, as a layman, we can say 3 contracts, but trust me,
three, sir.
Yes,
3.
but it is not 3 when we actually get into the terminal. Why? Because you will see lot of securities in the name of gold leaf at different stages, at different gold quality levels. They have these products, and that is what the financial innovation which has happened in the commodity as well the derivative segment. But as of now, theoretically, we will see 3. One for this month, July, next month, and next to next month. So these 3 futures contracts are the underlying for the options in the gold segment. Shreyas, am I clear?
Yes, sir.
Thank you. And now I want to know who is trading in the derivatives market. Anybody from this 36 minus 1, because I trade. I'm an active trader in the derivative segment. Out of 35, again, minus 1, PGDM Harrier 2. Veena ma'am is actually sitting over there. Even she is excluded from that. So 36 minus 2, 34. My question is for 34. Anybody is involved in derivatives trading? Please say yes. If no response, then it is termed as no. Okay, I take this silence as no. But anyway, if you are doing it, that's great. Abhishek, you are into the derivatives?
Good morning. No, sir, I'm not into trading, but I have a question.
Yes,
Uh,
sir.
Sir, when we go into money control and when we go into this commodities section,
Yes.
as you were explaining, Shreyans, that yes, gold in gold there are several futures and options,
Yes.
and sir, when we see in commodities market, there
Yes.
also they have this expiry date. Like if we see the latest one,
Mhm.
that is crude oil, it is expiring on 20 July. So, sir,
Yes.
are these also derivatives? Means, what is this? Why is this expiry date here in commodities in
Yes.
MCX?
Yes. MCX is a segment which is in line with the derivatives, and that is the reason you can see the expiry. Why? Because these are called as the futures. Crude oil, even I do trade on a regular basis crude oil, but since last few days I've stopped it. Why? Because big namaskar for crude oil, I have seen 40% down in a day, and then I lost
Yeah,
good
yeah.
amount of money. So these contracts are nothing but the futures contracts which are trading at one lot size.
Hmm.
And on the basis of these crude prices, the contracts, there are other securities which are derived in the option segment, like a call and put.
Hmm.
You will refer to, let's take a simple example, you will refer to July month, the one which you said, we will refer to that crude oil. But
Hmm.
if we have the analysis, and if the analysis says that the crude oil price is likely to go up, we
Hmm.
can go and buy less. But people who are called as the small investors, they generally do not buy. Why? Because they need a huge exposure. In other words, they need a huge money to buy.
Okay.
So what they'll do, they'll go for the derived products of this contract, which is present in the options market. If the
Uh,
analysis is saying that the prices are likely to increase, then they go for what options?
hmm.
Call options. If the prices are likely to fall down, then they'll go for buying what options? Put options.
Put options. Yeah.
Yes, Vikram Purohit already gave a response over there, put options. So we will get to know what these call and puts are. Not necessarily in the case of the crude oil, even in the case of the gold also. Gold leaf I bought last month under call option, saying that the prices are likely to go up. Unfortunately, again, I didn't made money in that also.
So, sir, that means from even this MCX commodities, we have derivatives of even these also.
Yeah, why? Because see, I'll tell you in a very simple sense. When we talk about the cotton, cotton never took birth in the equity market.
Hmm.
Cotton is what we literally see as a physical commodity. Therefore, depending upon the weather conditions, depending upon the demand and supply, if the prices in the local market, what we see for the wheat or say the cotton, on the
Hmm.
basis of that, the derivative segments or the futures, whatever you see in the money control, are depending on.
Okay.
That is how the evolution of the derivatives took birth in order to protect the rice producers. The contracts of the rice futures came into the existence during the late 17th century.
Okay, sir.
Thank you.
Thank you, sir.
Thank you, sir. Yeah, we are open for the discussion. Just let me know your questions. We will have a discussion on this, the derivatives segment, whatever we have discussed. Sahil was trying to speak something earlier. Vani was trying to speak something. You're most welcome now to ask questions. Or if you want to contribute something to the first hour session, you're most welcome.
Good morning, sir.
Hello.
Shivam this side.
Shivam Singh, yes, sir. Good morning.
So, can we have some example, more example on underlying asset thing? Because the curd and milk thing I understand, but some
Yes.
example from the derivatives market only. Like,
Yes. Now, when we talk about the products, I'll show you something here which was stored that as the next component. Just give me 30 seconds. I'm trying to load something. It was the part of the discussion, and good that you asked a question, which is, in other words, what is next? In simple words, after the scene, last scene, the question was all about the products in derivatives market, which talks about the forwards, futures, options, swaps. So this slide should actually give an insight on understanding like what exactly we have the products in the derivatives market. No problem. I'll take it much earlier now. We have Infosys equity share in the equity market. And if we make the analysis, let's say the fundamental analysis, and the fundamental along with the technical analysis says that the share prices of the Infosys company is likely to go up in near future, right? When we get to know that, we would like to buy Infosys companies derived shares in the name of derived contracts, which is nothing but the call option as a part of the investment. Why? Because a small change in the price of an underlying asset will be having a spike increase in terms of the derived instruments. This we will get to know operational when I load my terminal on a practical understanding. So Shivam, as of now, I can say any security which you see listed in the equity market, they are all called as the underlying. And any security which you see in the derivatives market or futures and options market, they are called as the derived instruments. And one disclaimer, not all the listed securities have the derived instruments. It is only some. So we will get to know what is that sum once I share my screen on the terminal. But before that, anything related to the discussion which we had in the previous class. So Shivam, you're okay now?
yes, sir.
Yeah, stay tuned because I want to share my screen, which is in the nature of what is that the terminal, and then practically we will see what kind of the derivatives we have, both in the case of futures and options. In the meantime, other question, what is that you have understood? Vikram, what is that you understood about the derivatives? What is derivatives to you now? On air, please.
Sir, actually, I understood. I have just one question about the derivatives and the option trading. Sir, whether it is too risky than what we invest like in equity or futures and options are too risky than the equity market.
Yeah, a very good question, Vikram. I know you are a very busy and active trader in the market. See, in the equity segment, you remain as an investor, and if you get into the futures, in other words, it is that your business. If you step into the options market, you're a high risk taker. So
Yes, sir.
you are yourself will be having a three different avatars. When you're in the equity market, your mindset will be cool, saying that you're an investor. When you get into the futures market, it is that you are a businessman. Why? Because the huge investments have to be made, especially when we talk about the futures. And if you're a high risk taker, you jump on the options market in order to make money. For every small change in the equity market, you want to make big profits or losses. Therefore, high risk taker when you talk about the options.
Okay, sir.
Thanks for asking that question. By the way, I asked you a question. What is derivatives to you now?
Sir, derivatives like if you want to predict the future of any like gold or I likely to see the gold prices would be going up, then I will definitely invest in the gold because the derivative market is nothing but predicting the futures of the gold prices likely to be go up.
Okay.
And
Have you have you ever traded in the derivatives so far?
no, sir, I was just doing a dummy kind of.
Okay. Do you have access in your Demat account to check the derivative trading platform?
Yes, sir.
Okay, you have the access, right?
Yes, sir.
Okay, my simple question to everyone now, including Vikram, be on air. If a new person, let's say if I open a new demat account, will I get default access to the futures and options, which is nothing but the derivative market, or do I need to apply for it?
Well, sir, Sivan this side, sir.
Yes, sir, please.
Well, I can say for the IFL side, Indian Info Line, there is
Yeah,
an option when you open the Demat account, they
yeah.
ask you that if you want the equities only or all. If you select all, you can obviously get all the features like
Okay,
and uh,
equity.
and if there is a Demat account of IFL still with you and you didn't get the derivatives option, you can
Mhm.
anytime call them or talk to with their your guide and you can get it the derivative option anytime.
Okay, very good. Now, another question in the same line for everyone because you have done a BI. I'm a student. I have no source of income. Very recently, I opened a bank account with the HDFC, say savings account, last month. And this month, I am trying to open a demat account with, say, IIFL. Will I be again provided with the access if I say I want the currency, I want the derivatives, I want the futures and options? Will I get the access?
No, sir.
Yes.
You need at least you need to show that you are having a bank account and you have a specific like income and outgoing, incoming and outgoing of some amount in your bank balance. So like you have a constant bank balance. That is what they check.
Okay.
I think
Now,
yeah, it is a
just,
must.
okay, just to add on now. Okay, my account balance is having sufficient. Okay.
So you have
Will I
just to
get? Yeah.
I don't know the particular thing that if they will allow or not allow, but
Yeah.
well, I was trying to get a person's derivative accounts something or also. There they just ask that you have to submit the bank statement and they will look
Mhm.
into it and what are the procedure if they allow or not allow. It is just up to the IFL customer care only. So I don't know particular that they will allow or not allow.
Yes, you already used the term which is called as bank statement.
Yes, sir.
Now, in my question, will I be able to get a bank statement?
So if you have a bank account, then although you don't have any transactions, but still you can get it. I think.
Ah. Yeah, see, last month I opened a bank account, and when they say bank statement copy, they generally ask for the 6 months bank statement, and some brokers they ask for 3 months bank statement.
Yes, sir.
Yeah, one of the requirement as per the stockbroker, and that decides whether I get the access or not. Otherwise, as Vikram Purohit as well, even Shivam was trying to say, if we do not have an access, then we can give a call and ask for the access. That is true. That is absolutely true. So, any other question now before I share my screen, which is called as the terminal, and then discuss with you? Any questions?
Sir, adding upon the same derivative, opening the derivative account.
Yeah.
Sir, as I am not having any income, but the 6 months or the 3 months mini statement is required. So, if anyone want to open an account, only
Mhm.
the 6 months or the 3 month mini statement bank account will be required for the opening and futures and options account.
Yes, we need that as a document. I can give a
Yes, sir.
small example here. Those who do not have a demat account, probably now, I'm talking about all the 36 participants now. It's a time for us to have a demat account, and the demat account can be at free of cost. We'll take a very simple example, SAMCO, SAMCO SAMCO. The moment when you apply online for a demat account, your default demat account will be only for the equity market, default demat account. Okay. And as Shivam said, you need to raise your hand and then say, I need access to currency, I need access to commodity, I need access to F&O. Otherwise, online, you have something called as the settings. Once you log into the Samco account as a registered user, you will see the different market segments. You can click on the segment, whatever you would like to have to trade. The moment when you click on, say, F&O, futures and options, the broker will get a notification that you need an access for so and so. But at the same time, when you click on that, they'll ask you saying that please upload a recent bank statement consisting of last 6 months transactions. Once you upload that, that is a part of KYC. The Samco will does. Once that is done, you will be getting a text confirming that you have an access towards the F&O, and then you can start trading. Vikram, you're clear?
Yes, sir. Yes, sir.
Okay. Now let me share my screen for you guys before we get into the operational side of the derivatives. Maybe I made an attempt in terms of understanding like how derivatives came into picture, and now I will be going bit advanced in terms of just showing you like how these derivatives look like as a part of applied examples. But once we get into the operational discussion again, we will get to know what these markets are, what these instruments are. Now let me share my screen, then let me get into the black screen. Okay, I've already made something called as KIAMS 2020 here. This is the market which we are already aware of. Now let me click on this advanced. You can see here I have an access for NSE, BSE, CDS, NFO. Now what is the CDS stands for? Anybody in the class now? What is the CDS? NFO? You can make an attempt now to share what is that you know about the NFO. NFO. Vikram Purohit, what is NFO?
New fund offer.
Someone already said new fund offer. No. We are talking at the market level now. New fund offer NFO, which is right, but that is in the context of the mutual funds. Thank you. But NFO, which we are talking about now, you can see here the moment when I open this drop down, these options are talking about the markets. NSE is a market, National Stock Exchange. BSE is a Bombay Stock Exchange market. NFO, what is NFO now?
Future and
Nifty,
options.
future and options.
NSEs, National Stock Exchange, futures and options. Was it Bhavika?
Yes, sir.
Thank you very much. How are you doing, by the way?
Good.
Good, thank you. And what is CDS? Don't say Combined Defense Services. We are talking about the market.
Sir, I guess it is something related to commodities and derivatives.
Okay. You are on an online platform now. You have your device. Take your mobile phone, go dig and get what the CDS market is all about.
Sir, I know about S. It stands for swap.
Swaps. Very good.
C and D I don't. I'm not aware of it.
Okay. Who's that, by the way?
Sir Rishabh.
Rishabh, thank you. Now you can see here, I've just clicked on the CDS and I'm under the one of the segment called as futures. And under that, if I see, these are the products I have. So what these products are called as?
Currency, your
Yes.
foreign exchange.
Yes.
Currency, sir.
Yes. So CDS is talking about what?
Bombay Stock Exchange.
No. I mean to say, what products CDS is talking about?
Currencies.
Yes, currencies.
Forex
And
market.
we have, yes, Forex, currencies basically. We just have these 4 products in the case of CDS. If I get into the options now, option, you will see again the 4. So CDS, currency derivative segment. Okay. Now let me get into something called as, instead of the CDS, NFO. Now NSE is a milk, equity market. BSE is a milk, equity market. CDX, we see the derived products. NFO, we see the derived products like curd. Now let me get into NFO. Now, when we talk about the futures and options as the derived products, now you need to link between the equity market and then you need to link that with the futures and link that with the options. Therefore, how many markets we are talking about? If we talk about the equity share, we are talking about the equity market. If we talk about the derived instrument of this equity, we are talking about the derivative market. Under the derivative market, are we talking about the options market or are we talking about the futures market? This is what the application is. Theoretically, in a slide, I cannot say this is how the different markets are integrated. Now, we'll do a simple example application. I would like to take SBIN. The moment I type in SBIN, which is nothing but the symbol, it says State Bank of India. From NSE, I would like to have. It is trading at the rate of around 194. So this SBIN, which is said as a series here, you can see equity, is my milk. In other words, is my underlying asset. Now, with this underlying asset, can I see the derived product of SBI? Yes, I can see the derived product of SBI. That is what application we are doing in this session now. Okay, what I'll do now, I'll just click on this advanced. Then I would like to get into the NFO. Here you can see we have 4 options: future index, futures stock, option index, option stock. IDX stands for index, SDK stands for stock. The question is now, what is it we are talking about? We are talking about SBI. SBI is not index. SBI is stock. Therefore, where can I see derived product of SBI? I can see in the derivative market. Okay, under the derivative market, what kind of avatar I can see? SBI equity share can have a derived product in option stock as well as option index. Future stock. Now let me click on this future stock. You can see here there is a list. I'll get SBIN. Okay. The moment I say SBIN, yes, the derived product of SBI equity share is available in futures stock market. But how many contracts are available under futures stock market? That you can see here. For SBIN, you can see 3 different lines, meaning that you can interpret in this way. We have 3 derived instruments, 3 derived SBI instruments under futures stock for SBI. Therefore, now let's simply get into July. Then I'll say enter. The moment when you select SBIN, you can see 30th July happens to be the expiry. Now 30th July happens to be your Thursday, last Thursday of the month. And that is the reason you can see the expiry as 30th July. And in the underlying market, it is trading at the rate of 193.9. And in the derivatives market, SBI derived contract for the month July is trading at the rate of 194. Now, let me make a quick analysis. If I get the contract for August, will the price be more than 194 or lesser than 194? For a derived product of SBIN, which is expiring 27th August 2020.
Call price more than that.
No, I'm sorry to interrupt. We are not talking about the options. We are just talking about the futures. You can see here. Let me do the navigation again. If these things are known to you, there is nothing called as Manjunath's rule here afterwards. It's just that you know what is the derivatives market is. Let me make an attempt here. We are in the NFO, futures and options. We are talking about the SBI. I'll delete this line, 30th July. We are talking about the SBI equity share, which is the equity. EQ says that it is forever. Forever meaning underlying. Underlying meaning equity market. Now I want to see the derived products of this SBI in the derivatives market. But now we will go with only the futures and next we can go for options. Therefore, I select futures stock. Why not futures index? Because I don't want to see derived products of indices. I want to see derived products of stock SBI. I've
Right,
selected
sir.
that, and now I
Right.
select here SBI, SBIN. So in the futures market, for any underlying equity, it has got 3 contracts, which we are aware of: this month, and next to next month. So if I select July, this month, we know that it is trading at the rate of 194.45, which you can see under LTP, last traded price. My question is, if I see the contract of derived SBI for the month of August, will the price be more than 194 of this month contract, or will the price be lesser than the contract price of this month?
It will be the more than the price of
So it should
the.
be more.
It should be more. Thank you. I love such kind of statements. And you see here LTP 194.9. In the similar way, if I select for September, you can see 195. Now, how is that we see the equity and the derivative more specific to futures market? If I want to buy equity share, I can buy even a single share. Let me show you how it looks. Yes, I've clicked on F1, which is for buy. You can see here buy order. Even I can buy one share. I can mention my price. We already got to know the different type of orders. Whether if we want to quote the price, that is called as a limit price, or if we want to buy at a price at which it is available, then that is called as market price. If I want to quote 193, that's okay. I'll quote 193 and I can place an order here by clicking on the submit, which means that I can buy even one share in the equity market. But if I want to buy futures, how it looks? Let's say, let me go and try and for 30th July 2020, I want to buy. You can see the quantity as a default. I did not type anything, guys. Did I type anything over the quantity? No. It is coming as default 3000, because we are talking about the futures stock. And that is the reason I said during my first session, investment on the futures will be more. And when I was addressing Vikram's question, I said, if he is present in the futures market, he looks this as the business because the investment is huge. Now, if I change this 3000 to 1, if I place an order, it should not take. You see the error message which is coming on the screen. It says quantity should be multiple of bold lot quantity. Can I buy 4,000?
No, sir.
No, sir.
Can I buy at 5,000?
No, sir.
No, sir.
No, sir.
Only
No,
3,000
sir.
multiples.
Thank you. Yes.
Multiples
Thank
of
you.
3,000.
Thank you. I'm happy with that now. You are with me. So this is how we look into the equity market and the derivative market. Since it is 3,000, it should be a 3,000 or multiple of 3,000, and 3,000 into 194.5, you multiply that, you get a big amount, and that is what the total lump sum amount which is required to invest on SBI futures stock or security. That is the reason investment on futures is termed to be a business. Any profits you make here is nothing but the business profits. Now, it is very clear that in the equity market, I can buy one, and in the derivatives market, I cannot buy one as a quantity. I should buy at a lot size. Try to understand this difference. In the equity market, you say shares, quantity, one. But in the derivatives market, you say not quantity as one, you will say quantity as one lot. One lot. If I want to buy 2 lot in SBI, meaning that 3,000 plus 3,000, 6,000 quantity. That is how we see for SBI in the futures market. Now, let me make a very small attempt here. Do not get scared of, guys. Be a bit relaxed, because I'll be using some functions. I'll be using some navigation. That navigation should not make you disturbed. I'm not going to create a nightmare for tonight, but definitely I want to make an impression with you guys saying that what is this options market is all about. So if you can get that question, that will help me to have my further discussions, further sessions very smoothly. Okay. Now what I'll do, I want to see the another avatar of SBI. The SBI EQ, you can see here, if I give a screenshot of this, you should be able to talk about what this particular screenshot says. Let's say if I take a screenshot like this. EQ represents equity, and that is nothing but the underlying, and again that is nothing but the equity market. And now if you see all these three, they are having something called as expiry. Anything which is getting expired is not an underlying. Anything which is getting expired should be a derived product. Therefore, the three lines which are having 24 Sep 20, 27 August 20, 30th July 20, these are called as the derivative contracts or derivative instruments, and they belong to derivative market. That is how we read. Now, other than that, we have one more avatar, which is called as option stock. Anyway, theoretically, we are not seeing as of now, but practically we want to see how it looks. And then we will initiate the discussion. The subsequent sessions will be talking about more about understanding the derivatives market. Under the option stock, I need to get SBI. Let me get SBI. Okay. The moment you select SBI, the next drop down is talking about two aspects, CE and PE. Nothing but call option and put option. I know by now you know the meaning of the call option and a put option, but let me take a very few seconds. If the equity share of SBI is expected to reach 200 in next few trading sessions, as of now it is trading at 194. If this is expected to trade at 200 in next few trading sessions, then I will go and buy SBI option, more specifically call option. Why? Because call option by nature it says bullish. You are expecting to move up. Now, what is that I was expecting based on my analysis? I'm expecting based on my analysis as 200. So therefore, this 200 is my strike price. The way how you strike at a striker in a carom, in the similar way, I'm striking at a price which is called as 200 based on my analysis. I am expecting that equity share of SBI in the equity market, which is at 194, will be 200 in next few trading sessions on the basis of fundamental and technical analysis. That's all. Therefore, I have an option now to go and buy one equity share in the equity market. That's okay. Second, I can also buy the derived instrument of this SBI in the derivative market. Should I go for futures? I'll not go with the futures. Why? Because the investment will be very high. Therefore, I'll go to options market, wherein if I'm expecting 194 to 200, which is likely to go up by 6 rupees, then I'll strike my price at 200. If my analysis says 202, 205, I can use a different strike price. Now, for example, I'll be using 200 as my strike price. Now, when is that this contract will be getting expired? This is interesting. You can see here again, it has got 3 contracts. Now, I would like to go with 30th July and then say enter. Okay. Do not get confused with the lines. For your easy understanding, what I'll do, I'll change it. Here, first 3 lines FUT, futures, and the 4th one is for the equity. And the last line is talking about SBIN, is a symbol of SBI for the year 20, for the month July, and it says 100 as a strike price. Nonsense. I don't want this 100. I want 200. Let me get this 200 and then say enter. Okay, let me delete this 100. So SBI 200 strike price call option, which is getting expired on 30th July, is available for me at the rate of 7 rupees. Now, how much money I should have in order to buy this derivative product of SBI in the options market? People like you and me, people like small investors, they jump on the options market. Why? Because that is really interesting. You can even have 50 rupees as an investment in the options and 5,000 or 50,000 up to your capacity. Now let me go and try. If I want to buy this, how it looks. Oh my God, again, you can see here. If I say I want to buy one quantity, and if I say submit, it says quantity should be multiple of board lot quantity 3000. So theoretically and technically, now we are clear that any instrument which we see in the derivatives market should definitely have odd lot size or the quantity, and that is decided by the exchange. That is the reason you can see here 3000. Now if I want to buy one lot, it should be of the quantity 3000. What is the amount I need to buy? Let's say I want to buy at the rate of 7 rupees. How much money is required to buy this contract? You tell me now.
21,000.
21,000.
21,000. If I want to buy same 3000 quantity in equity market, how much money I should have? We'll pull up the Excel for you guys.
Almost 60,000. Almost 60,000.
Yes, perfect.
50,
We'll make
58, 59,000.
Okay, no problem. We'll pull up the Excel and this will help us. Now I'll talk about the equity. Say equity. And I want to buy at the futures market. And I want to buy at options market. Okay. So what is that we are trying for? We are trying for SBIN. So in the equity market, let me capture it as exact 194. I can see here EQ. Then I'll block it as 194 LTP. This is the last traded price. In the futures. Now when I say futures, let me be very clear. I want to buy for July contract. This month. Again options, I want to go with July. So SBI futures July. Let me check for the price. Yeah, here is the line. SBI 20 July future getting expired on 30th July 20, which is very clear. LTP 194.3. I'll block it as 194.3. Option. So option I already have here, SBI 2020. It is talking about 20th July 200 as a call option. Give me a moment, I'm getting a call. Hello? Sir, class will begin. Thank you. Okay. If I want to buy a call option, which is at the rate of 200 as a strike price, the price, let me block it as 7 rupees. 7 rupees. Now, I'll mention here quantity. In equity, I can buy one quantity. In futures, the odd lot size says that I should go with the 3000. And for the option, it clearly says again, the odd lot size is 3000. Now, if I want to know the value, the total amount, the total value. So this one quantity multiplied by the LTP, 194 rupees is enough to buy one share in the equity market. In the similar way, you can see the price for the futures and for the options also. So someone was referring the futures, the total amount. You can see the screen here and then understand what is the total value required in order to make an investment in the futures at the rate of 194.3. How much is that, sir?
5,82,000.
Yeah, this is huge. That is the reason generally people jump on these options. Now, 194 rupees with minimum, you can buy one share in the equity market. If you have 5,82,900, If you want to carry till the expiry date in the futures market, go and buy. Or if you want to buy an option with a strike price of 200 at the rate of 7, you need 21,000 rupees to invest. So this is how the equity market and the derivatives market looked as. Now, what I'll do, I'll quickly get something here. If the share price of an SBIN changes to say 196, the future price is getting at the rate of 196.5, and the option price is likely to be at the rate of 12. You can see how is that you get the profits. So I'll derive here the profits. The latest value, I'll be using the latest value, which is that the second case minus the purchase time. So profits. In the similar way, if I do for these three markets, if you see the difference, you will get to know. Now you tell me which market is more profit oriented.
Options, sir.
Options.
Now, it should not be a goody words, by the way, because I've shown 194 to 196. If it goes 194 to 185, then it will be very worst that option price you may see at the rate of ₹2 and you may incur 15,000 as a huge loss. In simple words, the people, especially the investors, do go for the options market. Why? Because they want to make quick money. Then what are the challenges here?
Information should be accurate.
Ah, yeah. Is it who's that guy? Allu? Amir. Okay, yeah. Information should be accurate. Now, when you have the accurate information, the next important question is you need to be accurate in terms of your strategies, buying strategy, selling strategy. Therefore, we have something called as options strategies, which are the heart of this derivatives market. You will see a lot of options, say long call strategy, long put strategy, short put strategy, short call strategy. You will get to know every strategy as and when we are used for the derivatives. Now, any quick question on this case 1 and case 2? Given a chance, I'm sure those are really inspired and those are really having a mindset now saying that, oh, let me go and try what this bloody market is all about. I'm sure they will be entering into the options market, and then they may explore the trading of the options, and then you will get to know how these prices are getting traded. So this is the simple example. Now let's see the underlying. Oh my God, this is deadly.
Sir,
yes, sir.
Sir, what happens with these futures when we buy for say July 30th? So if we bought it at 194, and now the prices say is 195 on 30th of July. So what will happen on that day?
On that day,
it will automatically sell the shares.
Yes,
sell those
by
futures?
3:30 p.m. if you do not close your transaction.
Okay.
That day, automatically system will square off your open position. When you buy,
can we sell those futures before 30th?
Yeah, you're most welcome for that. I generally do, especially when it comes to these stocks. If I want to shift from July to August, on the last day, there will be a scope. I mean, there is a scope which is called as rolling over your contract. What you will do, you will sell at the price which is available on that day, and then you will buy the same contract for the month of August.
Yes, sir.
And that is called as a rolling over. Okay. And on the expiry day, you are likely to see this option price as say even 0 also, if it is going against to your analysis. So there are some terminologies: rollover, expired, or dead, getting expired on the last day or last Thursday of the month. Yeah.
Sir, it is compulsory to buy futures, right? In the expiry date, we should complete the transaction. Futures in options, we have the option.
Yeah. See, options are not necessarily to be called as an option whether to buy or sell. You can buy, but there is no mandate that you have to buy and you have to sell. Let us not get into the textbook meaning of the option. Let us try to understand. If I want to buy this SPI right now, I can buy at the rate of 7. There is no obligation. But when I buy this, I have a right to buy this. But at the same time, I have an obligation that I should sell before the expiry date. It's an
Yes,
obligation for
sir.
me. I have to sell it. But in the case of futures, there is no such kind of obligation for you. You can buy, you can keep it till expiry, and on the expiry day, you will have to roll over. You will have to change from that expiry date to the next day. I mean, next month contract.
Okay.
Yeah.
Yes, sir. Yes, sir.
Perfect. So these are the terminologies which we are likely to see in the coming sessions. By the way, for those people, I'm addressing those people, those who have thought that, okay, oh my God, this is something going crazy. No, I will definitely not make it going crazy against your thought process. It should be simple. Let me make it simple. That's all. I'll not be using all examples and then jumble everything and then show this bloody black screen and then make you get confused with the numbers. No, just be calm when you see the different contracts. Just a suggestion for you guys. Here afterwards, you may get such kind of assessment from my side. I might give some screenshot and then ask you to interpret. Yeah, be careful. Do not worry about any data, but always focus on this trading symbol. This column is very important for you.
Sir, can we do the intraday for the future and option trading?
Sir, why can't we? We can. We certainly can do that. I can buy now. That is what I was talking about when I was having the IAPM sessions. I got a call option before getting into the class. And during the class, I saw an increase in the prices and suddenly I started smiling and glowing. Yeah, the discussion went on so cool. And once it was over, I sold it off. Then I made my profits. But the cost which is involved in the equity market, futures market, and the options market do vary, which is nothing but the brokerage will be very high when you talk about the futures, and the brokerage on options will be a bit lesser than the futures, and the brokerage on the equity will certainly be lower when we talk about the brokerage. And today, I should not forget to make this statement for you guys. There are big players in the market. Zerodha has come out with fantastic number as a fixed cost for futures and options. With Samco, I pay 20 rupees if I buy a contract. If I sell a contract, I pay 20 rupees. So 40 rupees mein khel khatam, that's all. But with the equity, on the basis of the total value, the brokerage is calculated. It is not on one share. It is the total amount. But in the case of these derivatives or the futures and options, as per the contract, if you buy one contract, one lot, on one lot, you are supposed to pay the brokerage. Am I clear on the brokerage upfront?
Yes, sir.
Any quick question here? I was stressing you guys saying that you need to be very careful on reading the trading symbol. Any difficulty in reading the trading symbol? Just let me know.
No, sir.
Okay. So, what makes our life easy and cool? As we are at the fag end of this particular session now, let me give you some tips. Trading symbol, series or expiry, these two should be your best friend as long as you want to be in the derivatives world. Do not worry about any other thing. Just remember that you need to look at two columns. One is the trading symbol, second is the series or expiry. If series says as EQ, then it is the milk, which is nothing but the underlying, which is again nothing but the equity market. If it is not saying EQ, then if it is talking something in the language of a date, then it is a derived. Then how do I get to know whether it is a futures or options? In the trading symbol, you can see FUT as a futures. And for options, you will not see OPT. Instead, you will see strike price. along with whether it is a call or put. Now, what a nice example we have here. When we started this discussion on the SBI, it was at 194 and the option price was at 7 rupees. And now you can see, as and when the share price of SBI is getting increased, you can see the option price is also getting increased. From 7 rupees to 8 rupees, just 1 rupee difference. What is your profit? Yeah, what is your profit, guys?
9,000.
Are you sure? 1 rupee. Just 1 rupee difference
Sir,
from
3,000.
7 to 8. Yes.
3,000. Yeah.
Yes. Because we know one lot is equal to 3,000. Therefore, if you bought at 194 and if you sell at 195, you get only 1 rupee because you bought only one share. But when you buy one lot at 7 rupees and sell at 8 rupees, difference of same 1 rupee, but not multiplied by 1, it is multiplied by 3,000 quantity. Therefore, you get 3,000 rupees as the difference. So the option price of 200 strike price call option will get decreased only when the underlying equity share price of SBI falls down. So that is how a kind of quiz questions are, which are designed in the Kahoot for you guys in the upcoming sessions. Now, if you want to share something on the discussion, you're most welcome. Yes, sir.
Sir, say for example, if the price goes to up to 9 in some day, before the closing date, we can close it on that time?
Yes, we can. But you need to be very careful in terms of observing this underlying price from 194 to 198 and some 7 rupees to 9 rupees, and you can sell and then you can close your transaction. In the similar way, just to add on to Arge's question, if the share price falls down from 194 to say 185 and I bought at the rate of 7 rupees call option, now it is trading at the rate of 2 rupees. Still 4 days to go for expiry. What you will do? I'm sure you will sit and wait saying that let me wait for the prices may come up. If prices never come up, then you are likely to lose money. Therefore,
sir, or we can keep the same thing again, like after it sells automatically we can again buy it rollback.
Correct, you can buy back, but at what
Sir,
price?
because any stock which goes down has as long as the company is good, it has a great chance of going up again.
Yes, correct.
So we can recover the losses, at least 70 to 80% of it within the next month.
Yes. So when you bought at 7 rupees and during the expiry, if it goes to 2 rupees, you have to incur a loss of 5 rupees. And then you need to close your transaction at the rupees 2 and do not wait from 2 to 7 to happen on the last week or last day of the expiry. That is what I just wanted to send a message. We know that the equity share price is really amazing and the analysis says that it will go up, but not necessarily only on our expiry day. I have seen the mangoes in the derivatives market on the expiry day. It is something like say crying. Soon after the expiry day, my God, 3% up in the underlying equity price. But I saw the mango. I just felt it. It is so cool and it is so fruitful. I just saw, but I didn't feel it because it is an opportunity loss and the opportunity gain. Any other question? I'm just loving the way you are asking. Good. Come out with the questions so that we will get to know the basics of the derivatives strong.
In futures, we can increase our rollback period. Like we can go for the next month or the next month, but not in options.
Yes. Why? Because if you see these option prices, which are of just at the rate of 7 rupees against 194 underlying, on the expiry day, if the trend is reversed, the rule says that the rule, who has built this rule, I don't know, but I've seen a very good number of times as a 0. I've seen 7.3, this is 7.3 becoming 0 on the expiry day. If the equity share prices are in a reverse direction. Getting my point?
Yes, yes, sir. Here,
Yeah.
in while we purchase futures, the
Yes.
prices remain same. We
Yes.
just have to buy more quantity. So why so why not trade in equity for the same quantity if you want to?
Yes.
Why?
Very good question.
Because it is almost similar. The prices are similar.
Hmm.
Doesn't matter if you're buying futures or buying equity. As
Yes.
far as right now we can see. So so like so why
Yeah.
should we invest in futures and not in just equity?
Yes, that's a very beautiful question. Very beautiful. For me, if I'm a layman and if you ask this question, I would say, yeah, you're right. But if I want to look at the operational level now, there is something called as margin requirement given by the broker. I know, I am sure that the SBI share prices will go above 200. I'm sure about that. But if I want to buy in the equity, then I need to have the funds. But in the case of futures, what happens is you are not required to pay complete 5 lakh plus. There is something called as margin requirement. That margin requirement, according to the broker, you will be paying that money and then you will be keeping that as a stock with you, investment with you. And a small change in prices is multiplied always by 3000, which is a good sign for me. If I want to invest the same 3000, let's say, let me get into the Excel here. Let me change one quantity to 3000 and you can see 5,82,000 in the case of equity market. And broker will say you need to have complete 5,82,000. He will never finance you. But there are some brokers who will finance you and they'll charge at the rate of 18% per annum interest rate. But in the case of futures, what happens is no need to have 5,82,900. The margin which is quoted by the brokers, 20% of that or 25% of that is enough to initiate your transaction. You getting my point, Amaya?
Yes, sir. Yes.
Yeah. In the case of equity, I'm sure even with the Samco, Sala, when it is minus 100, they're giving a call to be saying that you have to pay. I mean, you have to transfer 100 rupees or cancel the transaction, meaning that sell off the stocks just because of minus 100 in the case of the equity. I was like, oh my God, what is this? Just for minus 100, they are talking about in such a way. But for futures, there is something called as the intraday margin requirements, maintenance margin, which we will be coming across in the subsequent sessions. Whenever the share prices of SBI goes below 194, let's say 192, then the futures price also is likely to fall down, right?
Yes, sir.
When it falls down, suddenly you will get a telephone call by your broker saying that you need to transfer some money in the name of maintenance margin because you have invested in the futures market. So I'm using some jargons here: maintenance margin, initial margin, which we will see in the subsequent classes, but we will not dig into that as of now. It is very easy for me to make too much money in the case of futures market rather than in the equity market, in simple words. Am I clear?
Yes, sir. Yes, sir.
Perfect. Any other questions, by the way?
Sir, as you said that you saw option call option in that company getting totally minus 100%. So at that time, that whole 21,000 will be lost or what?
Yes, thanks. I was just trying to remember the one point which I missed. This question made me to remember that. Yeah. In the case of options, unlimited profit and the complete investment can become zero. But in the case of
Yeah.
futures, that is not the case. To the extent of the price movement, to that extent you may incur loss or profit. But in the case of options, why people go for options? They get a dream. I bought it.
Unlimited profit, limited loss.
Yes, limited loss is entire 21,000. And if it goes from 7 rupees to 700, it can. And you can see unlimited profit. These are the another few features wherein the investors get attracted. If I'm an investor who want to see unlimited profit, then I'm open for limited loss, meaning that I'm open for the complete loss of my investment, that 21,000.
Okay, sir.
Yeah. Good. I'm just enjoying here, though you guys are not in front of me. We have a beautiful system and the terminal. I believe and I make an assumption that I trust you guys that you
Sir,
are involved in the discussion.
sir, another thing I wanted to ask, you said that say for up to the last day, the price of the this one was around from 7 it went to down to 2, and
Yes.
then the last day it went down to 0.
Yes.
How is it going down so suddenly? It's not if the stock price isn't changing much.
Yes. Thank you very much for this beautiful question before we wind up the session. These derivative instruments are purely based on time value of money. As time approaches, the value will shrink down. And that is the reason we say premium killing. We generally use a word called as premium killing in the market. Maybe on the expiry day, you can switch on the CNBC TV 18 and they say, even though there is no movement in the equity price, too much difference in the equity price, but still we can see premium is getting killed in the options market. This is how they make statements. Why? Because let us get into the basic definition of these contracts, the option contracts. You have a right to buy. At the same time, you have an obligation to sell, correct? When you buy, you have to sell. If you don't sell on the expiry date, it will be sold automatically. Am I right?
Yes, sir.
Yes, sir.
Therefore,
Sir. Yes, sir.
therefore, we have to close the transactions on the expiry day or just before the expiry day. Even
Sir,
if there is no movement in the equity, you can see premium is getting killed because people are selling their contract who bought. When there is no buying opportunity, when there is no buying demand seen in the contract price is likely to fall down naturally.
Sir,
Sir,
say for
is there,
example, if like 1 or 2 months back, we all knew the aircraft industry fell and its
Yes,
stock fell too much, and we all
yes,
knew it will grow up again.
yes.
So, in such a situation, when the whole country knows that it will grow,
Mhm.
isn't it a loss for some people to use this factor again?
Yeah. This tool or these contracts are playing a very different role. Why? Because we are betting it. We are systematically gambling at the rate at which it will appear. Say, for example, in this case, you are betting. I am betting that SBI share price will be at 200 on or before 30th July 2020. That is what the interpretation of that contract is. How is that I bet 200 is the question. And my betting at the rate of 200, if it is not appearing on or before 30th July 2020, then definitely people who have invested in that contract will sell and then they go back. When everybody starts selling and then going back, the natural definition says that when there is a too much selling pressure, the premium likely to become zero. What I'll do, I'll save these lines. These lines will be monitored in the next session also, so that we will get to know how these prices are moving ahead, right? This is the
yes,
case for us. We will track completely because we are in the derivatives world now. I'll take a
sir.
screenshot.
Yes,
I'll send an email to everyone. Let us build a Excel on the same. Let us start making the calculations. We will get to know the movement of a small movement of underlying can lead to a big impact in terms of the huge profits or huge losses in the derivatives market. That's all
sir.
from my
One, sir. One last question.
yes, sir.
Say for example, yesterday
Yeah.
there was a news that Reliance had an accident, like the an industry.
Mhm.
So people, like, now they have incurred a lot of losses.
Yes.
So today morning I could short sell in equity.
Yes.
So is there any option to do something like that in futures and options?
Yes, sir. When you are sure that there is a bad news for the Reliance and you are shorting the equity in the equity market, I would recommend you to go and buy the put option, the same Reliance in the options market. And how is that the put option works? That we will see in the next session. Right? We
Okay.
just talked
Yes,
about
yes.
the sweet lassi. We haven't touched about the salt lassi. Salt
Right.
lassi is nothing but the put option. Yeah.
So options, put option is there so that we can opt for it when we have a bad news for any stock, particular stock. But
Yes.
futures, can we do short selling in futures?
Yes, you can short sell the futures as well as you can short sell the call option. The 7 rupees now, you can see here the call option of SBI at the rate of 200. Now there is a bad news for SBI, let's assume. And I know that the prices will go down. What I'll do, I'll go and short at the rate of 7.3 now. When it comes almost
Yes.
0.05, I'll buy. But shorting the options require huge money. It is not 7.3 into that 3000, because your shorting means you can today make a kind of homework shorting on the options why it is costly.
Sir, sometime back, the US government had taken down their oil prices back to zero.
Yes.
Sir, so how would it had affected those people who were already invested in that?
Sir, even I incurred a huge loss because I invested in the crude, having a mindset saying that the crude is likely to go up. And suddenly there was a OPEC meeting which happened, and Saudi and Russia, they started making a fight. See, just because of my investment in the crude made me to do a digging research on what is happening with the crude. Everything went against to the analysis, and I also incurred losses. The
So, but
prices
in
went
this
up.
case, it was the country's decision which affected it globally. No
Correct.
such accident or something.
Correct. But there was a contract which was trading, right? Just before the expiry day, it has to start falling down. And on a daily basis, you won't believe it was, say, 40 to 45% fall, which I've seen on my investments, especially on the crude. You can see the contract prices which will be going down, going down, going down, if the contracts are present. And you know what? My broker did not allow me to trade the subsequent month in the crude, though I had a money. Why? Because they said this is a too risky asset as of now, and broker made it as a block list. It was blocked for the investors of the Samco to buy or sell the crude.
So, but everyone knew it will grow again.
Yeah, but they did not allow me to buy. And even, in fact, I gave a call to them saying that I want to buy. They said, no, for this period, the risk management team has taken a decision that some stocks or some contracts are banned for the trading. And that is the reason on a daily basis, you can see, even in the money control news also, there will be some stocks or the commodities which will be banned for that particular day to trade.
Like Vodafone Idea.
Yeah, if the risk level is high, then broker will not take a chance. See, who is blocking this, by the way? There is no God at all. SEBI doesn't care about it, but these brokers are scared of. If Manjunath raises his hand saying that, okay, I don't have money, then who will give money for the broker? And that is the reason they say, this is a risky asset, let us not trade on this particular item today. That is how the brokers take a call. Right? Okay.
Yes, sir.
In the interest of time, we will stop the session here. I believe you enjoyed the first two sessions on the derivatives. If so, please write an email. Open up your queries. I love to have the discussions over email, and then I'll make a note, customized note, and then we'll bring it to a class in the next session. Right?
Yes, sir.
Yes, sir.
Yes, sir.
Thank you everyone for attending today's session.
Thank
Thank you, sir.
Thank you, sir.
Thank you, sir.
Thank you. Take care. Bye-bye.
Bye, sir.
Bye, sir.
एक होल्ड कीजिएगा हाँ थैंक यू सर